or good day from wherever you are. This is Josh FX Pro, and I want to start a series of back tests. So I will first give you the reasons for the back tests and the benefits of the back tests. And these are the things you need to know about back testing. Every profitable trader that you know out there spends time back testing the market, right? It's there's a reason for it. There are reasons for it, and I'll tell you some of them. One of the reasons why they do backtest is so that they can understand the present market condition and the present edge, because market conditions do change over time, and market edge, trading edge do advance over time, right? So they they get to keep because what you know now is different from what used to work back then. The people who started FX, who started trading FX, don't trade it the way we are trading it now. There are things that have advanced, knowledge that have advanced up to now that is now more like what works in the market. So you have to follow up by backtesting the market. So market gives you raw data from which those raw data is where you build your edge from, is where you build your strategy from, is where you build your understanding of the market from. So every week, most traders do back tests for what happened last week to keep their memory fresh. This is another reason to keep your memory fresh of your strategy, because most times you may not have a trading journal, you may not have all the stuff, but doing a back test always gives you a clear insight of what you should be looking out for the coming week, right? So today is Tuesday and I'm posting this video. I should have done this video yesterday, but I had some technical issues. And I think my cable internet wasn't on. They were having some issues. So I couldn't do a record. I couldn't do a video recording because I would need internet for the chat. But today I'm back on and I'm going to do as much as possible that I can do. So whatever number of pairs I do a backtest on in this period, please and please take your time to figure out the edge that you understand here. And if you don't understand more, drop a comment. I would reply you and we'll go ahead, okay? So first of all, this is volatility 100 index. 100 index. So I'm going to put out something here, which we would all read. Yeah. I'm going to place it here. Yep. Okay. So this is like my go-to checklist. This is not the entire checklist, but this is like my final checklist before I take a trade. This is my final checklist. A lot of people have their different checklists. There are people who use Fibonacci to check if it's for SMC traders, the smart money concept traders. They use Fibonacci to check premium sell zones, or buy zones, or discount zones, you get, and they also use it to check liquidity areas and area of interest, right? So they also use it to identify different kinds of liquidity, the inducement, standard, and transactional liquidity. However you call it, some people call it trending liquidity, same level liquidity, all that. But I would show you my perspective of the market. So this is what I use over time. And I'm also doing this video to help myself also, so that the more I do a backtest, the more I grow in understanding and the more I refine my edge of the market and the more I make money, because the essence of trading is to make money in the long run, right? So what we'll be doing is read these things. This is confirmation for entry. I'll talk about these things but I'll leave it here. It will be here. I'll talk about it when we get to the point of when we need it, all right? So this video is going to be a little bit longer because it's kind of like the first video of my backtest. So what we do now is we're trying to look out for what happened last week. So we are backtesting last week. So we're doing Monday to Monday. you know, synthetics don't close. Synthetic market don't close. It's ongoing Monday to Sunday, Monday to Sunday. So I'm only going to do Monday to Monday because it's like the fresh starting of the week. Let's kick off. All right. So if you look between these two yellow lines, this is last week. This is between from the 9th of February to the 16th of February, right? Yeah. So we are kicking off from this last week. I would have done this way, but I don't want it to be longer. But as market further goes, I would keep showing people what I see and how I look at the market. So at first, this is the daily time frame. You got to pick out your zones. You pick out your zones where market really had some fluctuations. I'm just going to make this a dotted line. Sorry, this video is going to be a little bit long because I did a video before and it was just, I didn't know that it wasn't recording my voice. Yeah, I did a video before, but it wasn't recording my voice. So it was annoying. I have to now come back to do this video again. But it's good. It's good. It's good. So, because I need to have this as my journal. So whatever you do when you're trading, please keep a trading journal. It's very, very important. And most times, if you cannot view the chart, turn it over to the line chart. It's sort of better that way. If you can't view the chart properly, make sure you use the line chart. So you can find an area where you have a zone. There's an area here. There's a zone here where you have this rejection. There's a zone here where you have this rejection. There's a zone here where you have this little rejection. So I guess, so when you do this, what happens is when you turn it back to candlestick, you'll notice the rejection properly there. Do you see? You see what happened here? You see what happened there? You see what happened there? You see? So, um, you can also refine it if need be. You can refine the area where you put it. What I mean by refining it is you can drag it to a more comfortable area in the chart, a more comfortable place where you want it to be viewed, or where you want market to be viewed. Yeah. So I think this is more comfortable because at this point I don't want to use here. No, this is more comfortable. At this point, I have this, I have this, I have this a little bit here, this, and yeah, that. So let's box it in. I like to put a box on my chart. Sorry, this is going, like I said, this video is going to be long. There was no pre-planned. I wanted to just do this one, but I promise you the other backtesting videos will be short. I'll draw all these patterns. I just want to do this because it's the first one, right? I'll draw all these lines and all this stuff already on it. So what you look out for from daily time frame first is your zones. So I see a zone here, tap here, tap here, tap here, tap here. So that's why I put it here. And I see a zone here as well. So this is why I'm also going to put it there. So make sure you're getting zones from the highs above the price and below the price. Okay, that helps you stay focused or have a range in which you're trading. All right, so let's go. Now, for now, we have price moving in an upward trend all the way from here. Price has been going. Should I count this? Okay, yeah, I could count this from here all the way to here, 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 all the way to here. That's before this week, right? Before this week, right? So this is where it ended for this week, before this last week. So we're taking price as though we're not seeing this week. So you got to mark out what you need to see. So I'll leave this here for now. So we'll pick out what we want to pick out. So if you already know, price moves in trends, and before a price changes the trend, it has to break a previous trend. That's what they call change of character in smart money concepts. All right. So I usually use the body of the candle to indicate the trend which is being broken. But most traders also use the wick of the candle. But I love to use the body because that's like the main close of the candle. That's like the main close of the candle. That matters. All right. Um, so yeah. Now, if you look at this price scaling upwards, the last high low this price scaled was here before you have the last high. This high now, there was no high that was higher than it, right? In a place of uptrending market, you have higher highs and higher lows, right? You have more highs, more lows, a high, low, a high, low. So the highs are higher than the last high, the previous high, the lows are higher than the previous lows. So that's how you know. So you're looking for the last low that caused the last high. Do you get the last low that caused the last high? So if you had to look at it this way, this was my last high, my last low rather. Yeah, this was my last low that caused my last high. Copy. I'm pasting it here so it becomes on the straight line. Okay. Yeah, so this was my last low. Now in this case, because I have a low and I have a highest point, that becomes my trading range, a range in which I want to trade for this week. Because then market might not break it, market might keep going up, I don't know what market might do, but at this point, I don't want to know. I am at this point in the market. I don't know what market might do next because then it's been creating lows, but it hasn't gotten to my range though, to my low to break this low, but it has been creating shorter lows on a daily time frame. So I want to make sure daily time frame turns back to a buy, to it breaks all these highs, these lower highs here, breaks the last high before I can say, okay, it's a buy. But at the moment, it's still a buy, but I want to be sure that there is a break of structure. If you know that, if you watch, this broke here, this broke here. So, but this hasn't taken out here. And we are at this point now. So we need to make sure it takes out here before we can start looking for areas of interest to trade the market back up. But if it doesn't, we are also having another bias of if it breaks here, we'll start looking for areas of interest around this point. We'll have a new trading range. But this is our area of change of character. Okay, I'll put it here. Yeah, this is our area of change of character. Meanwhile, our our range, trading range, my trading range is going to be here. No, this is too slim. Okay, so this is also subject to change. Don't forget, this can also change as time goes on. If you notice a break of structure or something, then you can now readjust, change the view. All right. So if you look at what happened here, if you are to look at this, we are expecting a buy from the from the onset of this here. So there's no actual break yet. It hasn't taken off this high, but it has taken off this. So if you are expecting a bullish move, this market here would have been taken out at this point. Do you get? Would have been taken out at this point. So I think it was on Tuesday, at the end of Tuesday, right? So we have Monday, Tuesday. Yeah, it was on Tuesday candle that shifted, that changed this character here, right? On Tuesday candle. So now our bias is now different. The high that took out that low is where we will place our range high, our range top. Yeah. And then the lowest point of the low before the reversal starts is where we'll place our next one. Okay. So this is it. This is the lowest part of the low. So this market went all the way to this point. That was on Thursday. Friday was when it started selling. But let's see what happened during the week in this place. Now, if you look at this, we have a trading range. On a daily, this is what I like to do. I like to keep it there because those are very sensitive areas. We talk about other blocks. These are other blocks. On a daily, oh shit, I have to use this other one. On a daily, this is a daily order block. Why am I using this stuff? I keep making the same mistake. Yeah, okay. So I'll use the green box to indicate the order block, and I'll use the pink box to indicate the fair value gap. Okay. You see me write it here. D1 means daily order block. All right. So now we've seen the break. We've tapped our range. This is our range from here. If you want me to label it, I could label it as DTR, that's daily trading range. DTR. So see the labeling here, all right? So let's break it down to 4 hours. Let's see what happened at that area. Now, at this point, we have some confluence. Remember, I always talk about the last high that took out the low that changed the character or the break of structure. The last high, the last low, all of those things, they are very important. So at this point, there's the last high here that took out this structure, this low, that caused the change of character. There's a last high here, but there's a reason why I wouldn't take this price. I will show you why, because of these confirmations. So first of all, let's read this. First, before entry, first thing in the checklist is we have to have 2 to 3 rejections, 2 or 3 rejection confirmation on the other block or fair value gap, however the case may be. I could just put our fair value gap, FVG. Yep. So now, secondly, there are trend correction moves that we should look out for. There are trend correction moves that we should look out for. The first one is on the first break of structure. Once market breaks the first break of structure, then go straight to the order block or fair value gap without trending there. Then trade on the first rejection candlestick pattern. All right. Second one is, I'll explain all this. Second one is, okay, let me explain the first one so it doesn't keep you. So in this case, it was until the end of Tuesday. This is the end of Tuesday here, this particular candle. Now, this is Wednesday. It was until the end of Tuesday, Wednesday starting, that we had this break. So market went straight to this order block zone of the daily, right? Initially, you would also have an order block here. Yeah, because this was the last order block before the change of character, before the break of that area, right? Yeah, this was the last order block. So I'll tell you why I wouldn't be in this trade. I wouldn't join the multitude of people that took this trade. But maybe some people would have actually taken the trade from a lower time frame, 15 minutes or thereabout. Well, no, my entry time frame is usually either 4 hours or 1 hour, to be exact, 1 hour. And if at all I go lower, it will be 15 minutes, least 15 minutes. So this is how I approach the market every week. So every week I tend to find a possible means or a possible entry for the market, right? If I see one trade, that's all for me. Take my 1:2, 1:3, and I'm out, right? Just one trade per week, risk everything I could risk in it. For some people who don't have a lot of capital like that, please apply risk management. So let's go back to this. So on this first one, I meant once trade has broken all of this, this is your first area of break of structure, right? Because this is a high, this is a high, this is a high, but this high is more recent than this one, is lower than this high, okay? So on this downtrend, in this case, if it was uptrend, it's a different case, okay? It's the reverse. So market went straight, broke this place, went straight and entered into the order block zone, right? Without having a trend, without trending there. What I mean by trending there is this. I'll give you an example of what I mean by trending there. Okay, okay, this is what I mean by trending there. If you notice how, let me remove this. I think we're done with this. Yeah. So if you notice how market was supposed to go from here to here, let's say here to here, okay? So market did this, came here, created a low, came here, created another low, came here. This is not a low. This is just body candles. So if you notice, market did all of this, and this is a trend all the way to that point. But from here all the way to here is not a trend. So that's kind of like what I mean by trending to that zone. Okay. So market didn't trend to that zone. Now that's the first one. The second one is if you retest on the low or high after the first break of structure, then goes straight to the order block or fair value gap without trending there as well, right? Then trade the first rejection candlestick pattern. Okay, this is I will explain this with the candles with this. Now, this is market coming down to a point here, created a low, right? Came back to this point. Let's say you took it out a little, then came, break it. It breaks it. This is your first break, right? Comes back to this same area, right? Then went straight to the order block zone without trending down to the other block zone. So it just came back to the area of the restart area, the swing low area, without going all the way, without trending, like having a trend all that way. If it had a trend out that way, what you would do is this third one, trending structures to order block zone. What you have to do is to wait for a break of structure to trade direction, regardless of whether you're seeing a candlestick reversal pattern. It depends on the kind of candlestick reversal pattern you're seeing. If the candlestick reversal pattern is like a break of structure pattern in a lower time frame, then you can take it. Okay. So I'll give you an example of what I mean by that. I think in one of those trades. So, but in this case, this is what I mean by these three rules here. And follow me why we do this. So one of the reasons why I wouldn't take this is it invalidated my order block. So I don't put a pending order. I never put a pending order, ever. I would like to watch the market to wait for it to do its thing, come back, break low, from this could be a tweezer, then I'll take it. But in this case, it invalidated it by weakening above the order block. So I already know that market is not ready to sell this market at this point. It's not ready to sell at this point yet. So this could be an inducement. This could be an inducement because there are different kinds of liquidity. If you don't understand liquidity, you may become the liquidity for the market. So this could now be an inducement. So market just wanted to induce here for traders to jump in, place orders, and they would give you a sign like they are going, you add more orders, add more, stack up, then they will take you all out. See how they cleared everybody here. So if this order block doesn't work, the next order block that is close to it, remember, we're still in the daily order block zone. So the next order block that is close to it will be this order block here. This order block here, right? This is 4 hours. Yeah. So this is 4 hours time frame. We're in 4 hours time frame. So this is a 4 hours order block. Remember, leave your order block zones. Leave it there because there's you get why. There's a reason I said so. All right. So you'd always use it to keep in check that okay, I'm still valid for a sell until it invalidates your order block for the main time frame, for the higher time frame. Okay, so this is your order block. So this order block, if you notice, we don't have any fair value gap here. There's literally no fair value gap along all these lines. Market has been clearing every gap. So, but this order block had a little fair value gap, which was also mitigated. See it here, it was also, in fact, it was invalidated, not even mitigated. It was invalidated because this one cleared it before moving. All right, so there's no there's no fair value gap here. So market is strictly going to use all this place as liquidity to take out all the trades here. So what you need to do, you're now waiting for market to come to this point. And the coming back, this rule now, remember this thing took out the first high, the first break of structure, then came back to the zone, to the restart zone, the swing area. and went straight. There was no forming of trend up here, all the way up here. It went straight to that point. Then the next one we have to look out for is the 2 to 3 rejection confirmations on the order block of fair value gap. Now we have first candle went into the 4 hours order block, rejected. Second one went all the way to the middle of the 4 hours order block, rejected. Then the third one closed below as a evening star, right? A lot of people can also take this trade from here. This is 00 hours of Friday, the beginning of Friday. You can take this trade from here as a sell, right? And put your put your stop just above this point. So if you did that, you will be on, this market gave you at least 1:3, which is my ideal target. 1:3, 1:2. So if you took this on 4 hours, you'll still be in profit. But let's break it down to 1 hour and see what happens. These same rules applies also in 1 hour. Okay. Now see 1 hour. You see how market broke this structure here, came back. You see how it trended. Watch. You see how this is now a trend. This is what I'm saying. Market from this low trended, gave a high, gave a low, gave a high, gave a low, and went there. So there's a trend to it. So if you wanted to take this trade on 1 hour, you could have even taken this trade on 1 hour and you'll be profitable. There's a trend to that daily order block. And if you look at it, there's another block here on 1 hour as well, which was it invalidated? I want to check. No, it wasn't invalidated. No, it wasn't invalidated. So this would have been one off trade, right? If I had seen this on 1 hour too, I would have even taken this. This would have been one off trade. Okay, so yeah, I'll put this here, 1 hour. Yeah, but this is not my setup. Is this setup I'm actually looking at? But let's look at this one. So, for the sake of this rule here, for the sake of these rules here, so in this one we see a trending structure to the order block zone. Wait for the break of structure to the traded direction. So we're already expecting a sell. So a trending structure is here. This is the high, a low. I'll use this mark to mark it. Look at it, a low, a high, a low. Now, do you see what happened? There's this high, low presented here. So it's trending. So you don't trade anywhere until you see a break of structure. Now, the first break of structure we see is this one causing a low here, caused a high, then this is the break of structure. You get the break of structure now gave you an engulfing candle pattern, right? You could have taken this, make your 1:2. I don't think it's up to 1:3, but yeah, 1:2. Then your number one confirmation is still here, 2 to 3 rejection of the candle, right? So the reason why I used 3 here is because there was no, it was trending there and there was no break of structure yet. If it was straight and there was a break of, and there was no break of structure and gave us a reversal pattern, then we would have taken it. But it was trending, so you have to wait regardless of the rejection confirmation. So we saw this first push here, gave us a sell, rejected. Second push gave us a sell, rejected. Third push gave us a sell, rejected. With this place, you would have still taken a trade here to sell this market off. From here, put your stop loss just above the structure. And what did it give you? Did it give you 1:3? Yes, it gave 1:3. A clear, clean 1:3. Okay, I think it even probably gave up to 1:4. No, it didn't give up to 1:4. It's just 1:3, which is okay, which is fine. All right, so this would have given you 1:3 on Thursday, right? But on 4 hours, remember, market is not yet ready. Market is not ready yet. It invalidated our 4 hours order block. It purely invalidated it. So we are not in. We are not in. So yeah. So on 1 hour, let's look at this full structure, that structure, this one now. So market came back to the restart zone, the swing zone. and went straight. You see how there's no trend to that point, right? Since there's no trend, just after the first break coming back straight, which is the B rule, the rule B, as it went straight to that place, gave you your 2 to 3 rejection. That's how you take it. The first rejection, this is a 4 hours order block, right? Now, in this 4 hours order block, this is it here. Now, if you're to look for order block, 1 hour order block here, this would, within this 4 hours order block, this would have been a perfect place for your order block. Remember, this is a daily order block. We're looking inside the daily order block. Now, this is a 4 hours order block. We're looking inside the 4 hours order block within that range there. This is what you would pick out as your 1 hour order block. This order block here. This candle here. Yeah. Let's stretch it out. Okay. So, 1 hour order block. 1 hour. Yep. All right. So we see that the 1 hour midline is here and the 4 hours midline is here. Yeah. I think let me go and change the 1 hour midline to red. Is it red? What should I use? Green or sky? Sky is not clear. Okay, yeah, this is fine. Orange is fine. So you see the 1 hour midline, you see the 4 hours midline. 1 hour midline is orange, 4 hours midline is black. Okay, so you see how price came all the way, tapped in, first push, rejection, second push, which cleared both the 4 hours midline, middle line order block, and 1 hour middle line order block, rejected with full candlestick rejection pattern. This is a star, an evening star, right? This is a full evening star, or you can say it's rejection. So you can trade from here all the way and put your stop loss above here, or after this third push up and down, then you take your trade from here. But any which way you do it, whether it's from here, put your stop above here, because I always like to put my stop above the points. So you take your 1:2. The first push that came down gave you 1:2, right? Your second push coming down, if you're taking it all the way to that point, to the low of that 4 hours or this thing, it's actually a 1:5. Do you get? So 1 hour gave you or gave us a 1:5 trade in this point now. Okay. So this is how to follow it. When you follow this thing judiciously, the checklist, it works. I think I've noticed it in different pairs. I've noticed it in different pairs. But I can't show you everything here. And remember, this is not all the checklist. This is just before the entry, right? So we'll take another pair, but check out the next video for the next pair. Okay. I don't want these videos to be long, to be all that long. So let's go to the next pair. Remember, this is just FX Pro here. Drop a like, comment, and subscribe. Okay. If you have any questions, drop me your comments on the comment section and I'll reply you, or DM me on Josh FX Pro in my Instagram page and I'll chat with you there. Okay. So bye-bye.